Ladies and gents, break. Why in the world would anyone give you 2 free stock? Well, let's talk about the GME AMC saga today and what happened during the day. We had major sell-offs, and if you think about it, we have to have an explanation for each of these dips. Otherwise, we're just laying in the dark, hearing the sound of falling and not knowing what to do but smashing that like button. So making sure that you see the like cone all the way up to 1500, at least commenting out what like you are up all the way there as we explain what happened today. That's exactly why I am so excited, because I'm going to explain visually what is an in the money put, a deep in the money put, and why we are seeing a 50 million to 75 million dollars worth of calls in the money. So, oh my gosh, 50 to 75 million dollars worth of puts deep in the money for both AMC and GME, and what that means for you. Because likely you're going to understand the strategy and you're going to have to ask the question, what is to stop the hedgies from repeating this tactic indefinitely? Ask Jermaine. Well, we're going to answer that. First of all, what is an in the money put? Essentially, you're taking a look at this cost benefit analysis of whether or not you should buy a put. If you think that you are going to buy a put, let's say at $42 where AMC is currently, today we had about $220 million worth of volume, which is low, the farthest left side possible for the last few days in a row. Let's say you buy this put at $42 and say, I want to sell the price of the stock at $70. Well, obviously, everybody would like to sell at $70, which means the amount of profit you'll make is this blue graph right here, the amount of difference between 70 and 42. Not so fast. You actually still have to pay a premium because nobody is going to let you get away with that. That's why the premium is going to bubble up until at least it takes up all of your profit and a little bit extra, because this put is so safe. So now we are going to answer the question, well, how do you make money off of this put? You continue to drive the price downward. And if the price continues to move down, 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 you increase the size of that blue bar, but the red bar starts to fade away into the blue. What is the point of all of this, even if it doesn't work? Because it seems like everybody would go out and buy a deep in the money put because it's just so good at making you money, because it's just so safe. Right now, we see the price of the stock currently facing $46 million worth of puts at $70 strike, and then $30 million worth of puts at $65 strike. That's for AMC. For GME, a very similar story. We have $47 million worth of puts at $400 strike. And since GME fell all the way down to roughly my cost average today at 220, we also have some in the money puts at 250, although this might not have been in the money when these were first bought. What does this mean? A lot of people are betting that the price of the stock is going to go down, and they are paying huge premiums in order to purchase it. This amount of money had to come from somewhere. So you might have noticed that the Clovers, the Orphazymes of the world had seen ridiculous changes throughout the day. Orph was restricted multiple times today, halted for changes in this price that exceeded the expectations, much like how AMC and GME have been halted in the past, because it's just a circuit breaker, a stopper for the bears and bulls to stop, think, but consider. Orphazyme is a pharma company in Denmark, Europe. Citadel owes 0.75% of it. Sancho Pancho is coming out with a good point. Both Orph and Clove were owned in part by Citadel. And now we're having to tie it together with the mainstream media. We were talking about how we were bringing in the perception that these meme stocks are running together, they're birds of a feather, and they get pumped and they get dumped. All except GME and AMC, these two stocks have been running a legacy of DD that we have been collecting for weeks, months, if you've been following like DFV, years of research. So with that said, the new researcher that is coming up to our show. We've friend of the show coming a couple of times already is Mr. Austin Tobit. He is coming on the show tomorrow during the beginning of the market, so you don't want to miss his coverage of the House of Cards 2, the House of Cards 3, as well as brand new research that he has pulled together exclusively for this stream. So Mr. Austin Tobit is going to talk about what he sees as one of the reddest days since the March gamma squeeze, where we dropped from 350 all the way down to 175 in the blink of an eye for GME's price action. Once again, I am looking at the opportunity to recoup my losses, right? Many of these apes have these cost averages at around 200 bucks. I got in, I bag held all the way through January, and I am not done. I'm not even close to considering. I'm not even wincing or flinching. Hedge funds just spent a lot of money pumping and dumping Clover and trying their best to make it seem like that was part of the meme stock narrative. When they made a little money, they poured it all into the premium that they had to pay in order to buy into these puts, these very expensive, deep in the money puts. So now that you have a better understanding of what goes into a kind of day like this, we have to think about the other side. When AMC was ripping just a week or 2 weeks ago, we saw ridiculous proper at the money or out of the money calls to build that gamma chain up so that the gamma squeeze could happen. That is normal price economics. When users with lots of money, right, market forces with lots of money are able to trim some of the fat so that they can push into expensive premiums to try the old-fashioned way and cause the same amount of downward pressure as a short into deep in the money puts, this is an opportunity for the hedge funds to consolidate their power and say, you thought that we were covering, right? We had an opportunity to pretend that we were playing dead by driving the short interest all the way, for AMC at least, down to 10% as recently as yesterday. Now, instead of playing dead, we're going all in. We are pushing our agenda into what the downward pressure you imagine as apocalypse, as the worst case scenario, as a bad day for any kind of analyst, any kind of trading specialist, either if it's by fundamentals, either by patterns. Nothing was able to stick today. GME and AMC had multiple examples of bullish patterns from double bottoms, W's, if you guys care about the George W price pattern, broke through multiple times right at the pivot point. In fact, let's zoom out, because some of you have asked, can we zoom out? Gabriel Cabrera calls me dad, remembers that I like cups. What do you think of this second version? First, we don't even have to zoom out that far for AMC. Zoom out to the 30-minute chart, and you'll already be able to see a pretty substantial cup pretty substantial wedge made out of a couple of days of price action. This is this macro wedge that I drew in the beginning of the trading day that we had used multiple times as a technical indicator. However, once we broke through, that was essentially smashing our bullish wedge with the intention of breaking past this bullish pattern. So now that the price of these stocks are separated from fundamentals, the people that will have something to earn from it come in with as much firepower as they have. Luckily, with Option Sonar, I was able to identify these incredibly suspicious, criminally suspicious, deep in the money puts that cost a lot of money, but throw a lot of downward pressure on the stock. Now, let's look at that cup and handle from January to now. Well, actually, let me see. From March to June. For AMC, March to June gives us a hourly, at the very least, cup here. If you take a look at that cup, the handle over here has become far more of a frying pan. For GME as well, we are looking at a cup that is too lopsided all the way down past the bottom of the lip. So those of you with technical analysis expertise or perhaps trying out as a beginner, want to be able to learn from me or perhaps bounce off some ideas from my technical analysis chops, then go ahead and join the free Discord down below or join as a special tier with the Patreon link or the join button so that you can ask specific questions with other technical analysis people. But I love fielding questions just like this one. So Gabriel Cabrera, thank you so much for the question. And now I leave you banging your fists on your chest by asking the question, do you remember why you invested, right? Do you remember why you put money into AMC or GME? Was it to make a small money on the top? Was it to change your life station? Was it to be able to do the thing that you wanted to do multiple times, the one thing that you wanted to do once, twice, 3 times? If you remember that exit strategy I told you, we were already getting ready to talk about different ways that we could capture the amount of gains from this phenomenon, right? It's not about flipping a few $100s. It's not about flipping a few XXX digits or XXXXX digits. Right? It's not about that. It's about creating a space that allows the economy to never suffer from the actions of these maliciously greedy hedge funds. Again, let's take it from a man who does speak from the chest, Charles Payne. We had the opportunity to listen to what he had to say a couple times today, but most importantly, he is able to say one thing. I'm only going to play the very last part of this clip, right? It's a 3-minute clip. It's him trying to get a word out against shorts that are trying to maliciously manipulate the market, but the last 17 seconds are the most important part.
You agree?
I want them to make sure, though, that you can never stop. You can never short 140% of a company. I want to make sure that hedge funds can never keep shorting unlimited amounts of stock, because every short is a deliberate sell, a deliberate attempt to knock the stock down, and that is not a free market.
Every single short is an attempt to knock the stock down unnaturally, unfairly, and undemocratically, and that is not a fair market.
I couldn't hear what you said.
It's because the Apple Watches and the other people listening to you right now are trying to tell you exactly what the hedge funds and the people manipulating the price of the stock want you to hear. But most importantly, people, apes like Charles Payne, apes like you and me, know the math from the bottom to now, and it's not going to stop at the. It's not going to stop with one dip, 130% dip for GME or 113% dip for AMC. At this point, for me, I have no intention of even thinking about that sell button, but what do you think? Comment down below with your plan, and if this video is not up to 2,500 likes, let's drop a like and tell me which like you are. Get excited for Austin Tobit tomorrow. He is going to be here tomorrow. He's going to be right here at market open, 6:30 PST or 8:30 Central. And one more thing, hope you bring your hard hats, because it's going to be war for the options expiring tomorrow. As always, see you guys in the money.